Hello, everyone. Good afternoon. This is Will with Perpetual Assets. Very excited to have Jim Willie on the line with us again. Jim is the editor of the Hat Trick Letter, which is found on the goldenjackass.com website. Jim, how are you, sir?
Oh, I'm doing fine. It's good to be back. It's been a few months, and my usual line is, "So much has happened." It's really breaking down, and the claim I made a while ago is that the year will end with the situation being unrecognizable of how the year started.
You can almost argue that on a month-over-month standpoint. I mean, things are developing and changing very, very quickly here. In putting together our subject on what to cover today, Jim and I agreed that the theme unintended consequences would be one very fitting for the content to cover today. So let's fire right away, Jim. Our first, we've got several actions and outcomes here, different events that we'll cover that are generate different unintended consequences. Starting with the first, the abandonment of the gold standard in hopes of a clean economy driven by financial engineering. Jim, take it away. How was the abandonment of the gold standard in the interest of creating a financially driven economy or driven by financial engineering? What was the intended and then actual outcome, intended consequence and then actual outcome there?
Well, when they broke the Bretton Woods gold standard, it was kind of basic at the time. They didn't want to have the U.S. gold depleted by foreign countries that laid claim simply due to bilateral trade deficits. Trade was settled in gold, and the story told is that Charles de Gaulle of France kept demanding gold until we said, no, we're not going to do that anymore. So the U.S. was losing its gold, and at the same time, the Keynesians were quite pleased to see that they would be able to run deficits and be able to have a, social network. I'm sorry, social safety net for the economy, build up welfare, aided dependent children, whatever. And at the same time, we could have war on a credit card. So you never should keep out of your perspective that the main activity of the U.S. economy for 30 years has been war. It is what keeps our nation going, and it is what has killed our nation from a debt standpoint. But it set the nation on a wrong course with fake money, because without a gold standard, they immediately bargained with the Arabs. And from what I'm told, Kissinger actually promoted the concept to the Arabs and the Iranians to raise the price of oil fourfold. It was our idea. It was the Rockefeller idea, because then the oil companies had their windfall profits. They were huge beneficiaries, along with the Arabs. So we brought about the petrodollar standard. And, everyone thinks, well, that's stable. Well, it's not. It means that the oil-producing nations have a surplus of treasury bonds. And after a while, they get too many. They don't know what to do with them all. So you've got a nation like Abu Dhabi is an emirate in the United Arab Emirates. Abu Dhabi alone has $773 billion in their sovereign wealth fund. You think they might believe that they're at risk? Okay, so you've got fake money, debt saturation, the ability for, say, Langley to counterfeit dollars, the ability for Wall Street to counterfeit bonds, and you've got capital ruin. That's not what they wanted. These are unintended consequences. Capital ruin. It took a generation, but for the longest time, paper money has survived no more than about 35 to 40 years if you look back at 1,000 years of history. So we set the record for the longest surviving paper currency, but we're at the beginnings now of a severe systemic breakdown. Not really the beginning. We're in the middle innings. It's getting late. QE was I think, a death warrant. But the whole fake money the dollar, the paper currency, it encouraged the banker cabal to form deeper roots. You look at the Exchange Stabilization Fund for the Department of Treasury. They're into all kinds of financial markets. You got J.P. Morgan's Chief Investment Office that's managing the interest rate swaps that create artificial demand for our bonds. We don't have any buyers for the U.S. government debt anymore, yet we've got these nice, rosy, low interest rates. So we've undermined the financial markets. The Federal Reserve is rumored to own between a quarter and a half of the entire U.S. stock market. So we got grotesque imbalances. In the final phase here, and this is a point that I've been making for years, the dollar is being defended by war and bank fraud and hypermonetary inflation. This cannot stand. This is a horrible unintended consequence, and it's going to lead to an astonishing isolation of the United States, especially when they lose support of Europe, and that's in the process right now.
And you had written down, since our allies will choose trade over war, and I think it ties in very true to what we're seeing happen today. We're seeing the big bully on the playground who just wants to fight, and all the other kids looking around going, this doesn't really make a whole lot of sense. Let's engage in productive activity together.
The point I like to bring up in that tune is Germany imports 40%. Germany is reliant for 40% of its natural gas from Russia. Are they going to do a sanction?
It's cold in Germany in the winter.
Yeah, well, also the Germans have between 3,000 and 5,000 companies that are doing active business in Russia. Are they going to do sanctions? No, they're going to choose commerce. They're going to choose trade. And they're going to walk away from the U.S. It's an unintended consequence that the U.S., from all of its phony money and war, is going to lose Germany and France as allies.
Mm-hmm. Let's talk about the action of outsourcing industry. Back in the 1980s, in the decade of the 80s decade, the outsourcing of industry that we saw take place in our country, what was the intent of the action? And then here we are, a few decades later. What are some of the unintended consequences that we are reckoning through?
Well, we were thinking micro, and we lost the macro battle. On the micro, we wanted to reduce costs, and it all made a lot of sense. I remember in '84, I was working at Digital Equipment Corporation, and in 1984, Intel made a big decision to move to the Pacific Rim. And we thought, oh, this is not good. We can't have the technology industry largely move their plants and fabs, as we call them, fabrication plants. Mm-hmm. If the fabs all move to the Pacific Rim, we're going to lose a significant portion of industry in the United States and income. So there were two other factors that were very important for the decisions that corporate America made to do some outsourcing. And that was the labor unions and the environmental movement. And we were tacking on heavy costs for the clean smokestacks. We were tacking on heavy costs for, I remember, I grew up in Pittsburgh. I remember the steel workers were on strike to get $80 an hour. I thought, what?
Wow.
Right. And, these were not good elements of the union activity. There were plenty of good elements like taking care of the injured and making sure that their pensions were safe and secure and building up. But the environmental and labor union factors started, I think, the outsourcing. And U.S. corporations realized, well, gee, we got much lower labor costs and no environmental rules at all in Malaysia. Mm-hmm. In Singapore, in Taiwan, they have more rules, but what was the macro level unintended consequence? We removed legitimate income from a lot of workers, a lot of industries, sectors within the industries really, and as a result, the United States needed to find some source of income, wealth generation, and they turned to asset bubbles. Mm-hmm. And how long was it before? 1984 started the clock in my mind because that's when Intel left and a lot of companies followed. Mm-hmm. How long was it before the first crisis hit? 1987, Black Monday. Mm-hmm. So we had a rather quick incident. Emerging markets are responsible for something like 80% of all the savings in the global economy right now. So they're the big new voice coming up, and the unintended consequence of this outsourcing is the rise of the BRICS. Mm-hmm. And the U.S. economy has been gutted. We haven't had any housing recovery. People who think a housing recovery has occurred are very misled. They're looking at a couple of different markets like Arizona and Miami, and they're seeing the effects of private equity firms, yep, Wall Street offshoots, that go in there and buy 100 REO properties at a time. Those are the foreclosed real estate. What is it? REO? Oh, shit. I'm sorry. I can't think of the exact acronym for it, but it's bank-owned property, mm-hmm, and it's foreclosed. All right, there are other problems. When the U.S. had to turn to asset bubbles, well, they went to the stock market bubble, they went to the housing bubble, they reactivated a housing bubble with Greenspan's help in 2003. I mean, that was crazy. We should have had a correction. Instead, we had a second bubble come up, which meant that the impact from its correction would be double, and we had a double hit to the housing market, down 30% nationwide. So we've run out of asset bubbles to reap wealth from, and now we've got the last asset bubble. I don't like focusing too much on the stock market. That's really kind of an ancillary effect to the Treasury bond asset bubble. Mm-hmm. The biggest asset bubble in history right now is in form, in shape, active, with Treasury bonds, and has a lot of different support mechanisms like derivatives, interest rate swaps, central bank action, monetizing the debt in unsterilized fashion, which means they don't take money out when they put money in. So this is the largest asset bubble in history, and I think it signals the U.S. being a failed state. That's an unintended consequence from outsourcing, I would think.
Very interesting. A lot in that category as it pertains to the consequences on outsourcing industrial capacity. To think that emerging markets are responsible for 80% of the world's savings, or roughly 80%, is very staggering. Tells you where, I mean, savings is the piggy bank for productive capacity, right?
Yeah, and they're going to dictate what the dollar alternative is going to be because they're rejecting the dollar now.
Right, right. Speaking of, let's move on to the next topic, Jim. The Chinese lease of gold to Wall Street with additional underpinnings. What was the intended consequence or outcome of the action, and then what were the unintended consequences that we've seen take shape?
This is really not common knowledge. If you were asked, say 100 fund managers, what do you know about Chinese leasing Wall Street gold and the back end of the most favored nation status, they say, well, I'm not aware. Mm-hmm. So the U.S. offered most favored nation status to China. It was done by the Clinton-Rubin administration. I like always adding Rubin to the name of Clinton because Clinton was a kid. What was Clinton's preparation? Well, he was a bond fraud expert from Arkansas. I forget the fact that he was a governor. That's just a part-time job. I know it sounds kind of nasty, but it is nasty. Well, we gave the Chinese most favored nation status, which launched $23 billion in foreign direct investments. The Japanese had their own foreign direct investment. They call it FDI. Mm-hmm. So U.S. and Japan loaded in a huge amount of FDI. So did the Europeans. So did Germany. And Chinese industrial renaissance was begun. Well, there was a back end to that. We gave them something, and we wanted something in return. Rubin arranged with Wall Street a huge gold lease. I don't know the amount of the lease. I'm guessing that it was a couple thousand tons of gold. I don't know exactly, but I'm thinking unless it was at least 1,000, it wouldn't have amounted to much. So they got a couple thousand tons of gold, and it allowed them to continue their gold leasing game to support the dollar. They were all about supporting the dollar. Remember, Clinton called it the decade of prosperity. I call it the decade of stolen prosperity because it gutted Fort Knox and raided through 0% leasing Fort Knox gold. So they borrowed the gold, used the money, and with the money they posted treasury bond long contracts. So they made money on the falling gold price and made money on the falling interest rates with their bonds. They made a few $1 trillion, Wall Street banks did, by raiding our gold treasury. All right, I don't know if there was an expected positive from that, except to sustain the dollar. But in 2005, 6, or 7, I don't know exact dates because we don't have these contracts before us. The U.S. Wall Street banks reneged on the lease. I believe that triggered the subprime loan crisis, rather. Mm-hmm. The subprime crisis hit in the summer of 07, I think, when the Chinese were dumping a lot of Fannie Mae bonds. Mm-hmm. And we had some emissaries go over there from the Treasury Department and other emissaries to try to get the Chinese to buy a bunch of our mortgage bonds, in addition to our Treasury bonds, selling them as, well, it's a tag team of financial securities underpin the U.S. economy. Well, they do. They undermine the economy because they're negative. All right, the gold lease, I believe, was significant, something on the order of 2,000 tons. They call it the Mao-era gold hoard, Mao Zedong. I believe the Chinese said to the Wall Streeters, yeah, we don't trust you. We want some collateral behind this gold lease because we don't trust you. Mm-hmm. And they had some property that they attached, like J.P. Morgan's headquarters in South Manhattan.
Yep.
Like some other property. The Chinese own 30% of Manhattan commercial buildings right now. And I'm hearing, this is very difficult to prove, but it pieces together well. This is my theory, that the Chinese had the U.S. and Wall Street devise what I call an IRS, tax source secure stream derivative. Think of it as a national mortgage bond. And with all the IRS income, which is not tiny, I think it's like $600 billion a year.
Right.
With that amount of money, they created a derivative. Think of it as a mortgage bond at the national level, an aggregate mortgage bond. Mm-hmm. And they put it into place, and it was held by the Chinese government, with the gold lease being the underlying contract in delivery. So Wall Street sold out the U.S. population twice. Once with the most favored nation given to China and the buildup of their industry, and second with the IRS guarantee, which I believe through the painful annual chronic recessions that we have, that are, I believe, I'm not making this up, I do calculations. I look at the improper price inflation calculation and the deflator on their nominal gross domestic product, the GDP, mm-hmm. and I see a 4 and 5% error every single year. They're calling inflation growth. So when we say that we had a 2% growth for 1 year, I say no, it was -2 or -3. Mm-hmm. Now we're saying we have close to a 3% negative first quarter. I'm saying we have a -7% recession.
Right.
So the chronic recession brought about a default on the IRS secure stream. We no longer can provide that aggregate income from the IRS derivative. And my speculation is that with this default, China confiscated some Wall Street properties like the headquarters for J.P. Morgan, and I believe has now purchased a significant stake and maybe a majority stake in the Federal Reserve. Mm-hmm. So China is exercising its collateral seizure rights as an unintended consequence of this gold lease and just raiding U.S. cities for their commercial property. It's also Toronto. It's every major U.S. city the Chinese are buying property.
Wow. Well, I mean, your claim, I mean, based on the fact that all of this was collateral for this gold lease swap agreement, kind of makes sense. I mean, look at the properties. Look at the properties being gobbled up by the Chinese across the country.
They're converting their $1.3 trillion in treasury bonds And notice that Operation Twist was designed for China to get out of long-term bonds for treasuries and get into short-term so they can wait out for their maturity.
To unwind the longer positions?
Long-dated paper into short-dated paper.
Yeah.
And if they were holding, this was in 2011 and 12, so if they had a 2-year treasury bill, all right, it's matured. They didn't have to sell it. It matured. Mm-hmm. And how did they get redeemed? Well, the QE.
Right.
This is all interwoven. We're printing money to pay off on matured debt. Mm-hmm. We're monetizing the U.S. government debt. We're monetizing the U.S. Mortgage debt. And we're redeeming Wall Street with a big backdoor. Okay, so we got another unintended consequence from the Chinese lease, and that is that they're buying up Wall Street banks and Wall Street property.
Yeah.
South Manhattan property, anyway.
Mm-hmm. Okay, next point. Quantitative easing and rampant bond monetization. Covered derivatives.
All right. When we announced as a nation, the Federal Reserve, that we're going to do bond monetization with QE, we actually pointed to Japan as a success story for that, when actually Japan was the failure story, as an example. Mm-hmm. In 1991, Japan started QE, and they have not raised interest rates since. So what makes anybody think the United States is ever going to raise interest rates? It's a trap. It's the end of the door, the end of the channel, the end of the alley. It's a blind alley. There's no way out. So when you do the QE, there are two ways you can do it. You can print money and buy up treasury bonds and mortgage bonds, while at the same time draining money from the U.S. banking system. That's called sterilized. Mm-hmm. We're not doing that. We're doing the most dangerous time. Okay, we're doing the corrosive, unsterilized, hyper-monetary inflation route, and it's somewhere on, they talk about $40 and $50 billion a month, and they're lying, saying it's coming down. If you include mortgages and everything else on the security side, it's more like $80 billion that never changed, $80 billion per month. If you include derivatives, which I don't want to cover much, but exotic, weird, leveraged contracts that banking industry loves to have floating around, I believe they're doing a lot of coverage of derivatives so that if you add to the mortgages and the treasury bonds, the derivatives, I think the U.S. Fed, I call it U.S. Fed because they're situated in the United States, but the Federal Reserve, I believe, is doing unsterilized monetization of something on the order of $150 to $250 billion a month. Okay, so what is the consequence globally when the Fed is printing money to cover U.S. debt, whether it's federal government debt or housing debt? When QE comes and it's unsterilized, the response is a higher cost structure across the entire global economy. And you see it all over the place. You saw Egypt erupt. Egypt did not erupt with riots to depose, oh gosh, what was his name? Morsi? I can't remember all the different players' names. But the U.S. puppet, Mubarak.
Mubarak, yeah.
Mubarak was deposed and Morsi was put in. Okay, it was not about, jailings of political opponents and, more Islamic rights and freedoms. No, it was food price inflation of 60%.
Right.
In 1 year from QE. We don't like to talk in the U.S. press about consequences to food prices in the rest of the world. The other consequence is that investment firms, financial firms, they would hedge against the dollar. And they would buy, say, metals. They would buy gold and silver. They would buy industrial metals. They would buy farmland. They would buy energy deposits. They would buy lots and lots of other things that were under the category of hard assets. So the entire world experienced a consequence of QE, and still does, of higher cost structure. Mm-hmm. Notice that because of company liquidations and because of weak economy with low income and poor labor market, most companies cannot raise their final product prices. I mean, a great example is, well, you got a clothing store that just went under, they're doing a liquidation sale. Well, do you think their competitors can raise prices? No, obviously not. So you're getting a squeeze on profit margins. That is the consequence, unintended, for QE. It's not only unintended, it's expected by these economic experts, because every time in history that QE has taken place in an unsterilized fashion, you have seen precisely this cost structure rising. In Japan, they did more sterilized. They would take money out. Recall they had trade surpluses rather.
Right.
When Japan has trade surpluses, they can afford to buy out on the offset the covered government debt with QE. The QE done by the United States is not the same as the QE done by Japan. So you're having an undermine to value and integrity of the entire Forex reserves by lots and lots of different nations. They hold treasury bonds. So what are they doing in reaction? They're diversifying out of treasury bonds. They're not buying treasury bonds. You look at the tick reports, you see one country after another. It's plus or minus next to nothing. They're not changing. So the full reliance for government debt is falling on the Fed. And the bank reserves are being undermined. And when you've got numerous nations that are sitting on, they're emerging market nations, when they're sitting on huge reserves and the U.S. is undermining them with QE in an unsterilized fashion, what you do is you build up an enormous unintended consequence of BRICS nations developing a following of associate nations to come up with an alternative to the dollar in trade and banking.
By default.
Well, by common sense, by self-preservation. If you're sitting on stock for a company, let's just say IBM is in a weird position. You're holding a lot of IBM stock, and you learn that they're taking borrowed money to buy their own stock, and they're doing it out of control. You're going to want to hold on to your IBM stock.
I'm going to either want to dump it, but with fear of dumping it, I'm going to know that that's going to hurt me as well. So I'd probably try to hedge my position and lightly sell as best as possible.
That's exactly what the Chinese are doing.
Yep.
So if you saw little Susie in a lemonade stand, and you took a peek over the wall and saw Susie's little sister making fake lemonade, putting all kinds of junk in there, turning it yellow, are you going to buy it? No, you're not even going to want it. You're not going to buy their lemonade stand or their lemonade. You're not going to have anything to do with it, and that's what's happening. Right. You've got official debauchery and undermine of the global currency reserve. So the unintended consequence is the BRICS nations coming out of the East, largely led by Russia and China. And notice the parade of associate nations. I'm waiting for Argentina to join. And they're already coming up with rules for these BRICS nations that a new nation can join. But the original 5 will retain 55% voting rights.
Wow.
So they're coming up with rules. So they're going to expand, and it's going to be the anti-dollar movement. They're going to come up with a gold-backed currency. And they're going to delay and finally come up with it. But I think it's going to happen something's going to happen in the next several months. It's going to break this thing wide open.
Wow. Wow. Well, let's move on to a lighter note. Just kidding. Ukraine war. Iran sanctions with Syria and Cyprus actions. What was the? This is a tough one. What sort of positive goal could have come out of this? It seems like nothing but ugly unintended consequences.
Well, the goal, I think, by the U.S. fascists. I don't use the word lightly. You take a close look at what the neocons are, and you find fascists. Take a close look at the Trilateral Commission and New World Order crap, and you find the fascists. Take a look at Henry Kissinger, and you find a fascist. Find lots of different roots, and I think it goes back to the Kennedy killing. That was a fascist project, and they took control of the dollar and installed Kissinger, and oh boy, it's very ugly. But if you want a supposed positive from the Ukraine war, it would be to guarantee that Europe would retain its status as a U.S. ally and become more of a U.S. energy client.
Ugh.
And it's a bad plan. It's a bad plan because it relies on U.S. shale and fracking. And shale is a fraud because it's regularly you're getting stories of a 90% write-down on reserves from shale.
Right.
Regularly you're seeing stories about fracking for gas and contaminated water and unbelievably fast depletion rates. And for those who are not familiar, what it means is you install a well in February of 2014. Well, by the end of 2015, it's largely depleted. So you need a new well, and eventually you run out of places to make new wells, and you're done. So this is what we're going to supply Europe with on gas when we don't even have LNG ships?
Mm-hmm. Let's not forget, Jim. Let's not forget, Jim, that building each one of those additional wells costs energy. I mean, the whole basis here is we're trying to secrete energy from the ground, but we're continually spending more and more and more energy to get it out per unit.
Oh, they have the experts in shale and fracking have determined that about 3 units of energy are required to extract 1 unit of oil or gas. Yeah. So this is not a national energy plan, nor is it a plan to build the alliance with Europe. In fact, what they're going to do is they're going to turn their back on the U.S., say, no, we don't like the whole concept of war with Russia and friction with Russia when we're already engaged with trade with Russia. We're going to advance our trade. We're going to turn our backs on the United States. The other items in this category are the Iran sanctions, the Syrian adventure. The Iran sanctions resulted in an immediate response by India and Iran. Iran sold oil to India. India turned to Turkey to buy them some gold as intermediary, and then India delivered that gold on provision to Iran. It's a triangle. Right. Turkey's the intermediary. They don't walk away with a bunch of gold. They walk away with a profit for having provided as an intermediary the gold for India to deliver to Iran. Mm-hmm. So what they did was they developed the triangle, which is the essence of the gold for oil trade. It's the prototype for what is going to come with the Eurasian trade zone for paying for gold, paying for crude oil shipments, and eventually paying for shipments of lots and lots of things like coal, copper, iron, finished products like televisions or computers or components. Okay, so the unintended consequence was the gold for oil trade was developed and refined as a working prototype. I don't want to get into all the intricacies of Iranian law that were worked around, but they were clever. They're trying to avoid dollar-based settlement. And now you're getting lots and lots of countries that are going straight to Chinese currency in settlement, the RMB. Some people might be confused. RMB stands for renminbi. Hard to pronounce. Renminbi. And RMB stands for that, and it means people's money. So officially it's a Chinese yuan, a.k.a. the RMB, people's money, the renminbi. Mm-hmm. So the yuan and RMB are the same thing. Mm-hmm. So we've got a lot of companies now dealing with China, and they're settling in RMB because they don't want the nuisance of dealing with the dollar anymore. They don't want to have problems with banking restrictions. Let's just settle it with the RMB. And you've got a prototype way back in 2006 or so between China and Brazil with a yuan swap facility. So they have settled in RMB for 8 years between Brazil and China, and they have lots and lots of construction projects. So they're building up their commercial ties. I regard all the yuan swap facilities between China and it's up to something like 18 or 22 countries now, including Australia, wow, including Germany, including Switzerland. These are ally nations. So the unintended consequence with all these different adventures, including Syria, is an unwillingness to deal with the dollar anymore in trade settlement. We've actually got a tripling. It's from tiny to small of U.S. corporations settling with China in RMB for their monthly debt for imports. We have to pay for them. Walmart is paying more and more in RMB. And I'd like to point out that Cyprus, there's a hidden story behind Cyprus. The Russians were using Cyprus to convert treasury bonds to gold.
Cyprus was kind of like the it was like a Virgin Island banking center for the Russian elite.
Yes, in fact, it was pretty much their clearinghouse for all Russian banks.
Mm.
So that was the first attack against Russia by the West. And they tried to explain it as an insolvency of Cyprus, and let's start this model for the bail-in confiscation. But notice that no country in the world has done any bail-in confiscations in 1 year and 4 months. So was the real story to obstruct Russia and their treasury bond to gold conversion? I think so.
Mm-hmm. Interesting unintended consequence. The whole goal of this Ukraine war, Iran sanctions, Syrian adventure, Cyprus actions was to maintain the dollar hegemony. Hey, let's all continue to play in this sandbox, and what it's inevitably done is push the world further and further away. Next topic: post-Lehman lashing together of big Western banks. What was the intent of the action of the post-Lehman collusion of all these banks, and what have been some of the unintended consequences, Jim?
Well, I don't want to get into a lot of the background of Lehman, but that was basically a kill job. They were the most exposed. They were the most vulnerable politically in the Wall Street group of banks. The most vulnerable was Goldman Sachs from mortgage exposure. They had more leverage involved. Mm-hmm. So in order to save Goldman Sachs, they killed Lehman. And it wasn't hard to do. All they do is they deny a lot of the settlement of bond trades and all kinds of different securities trading. And the question leading up to the Lehman failure was, why isn't Lehman being paid their due under contract? Mm-hmm. All right, so it was a kill job. And then they took the derivative house of AIG, nationalized it. Well, why'd they do that? Well, that way you can hide all the fraud in it, but you can also order that Goldman Sachs get 100 cents on the dollar and everyone else get 30 to 60 cents. Mm-hmm. Afterwards, they lashed together the big Western banks. And I'm not talking just about the Wall Street banks. I'm talking about the London banks, big French banks, Italian banks, and Spanish banks, and German banks especially. So the Western banks, London and New York, all lashed together. What I mean by that is tied themselves together. Back in 200, 300 years ago, on stormy seas, ships that crossed the oceans had a lot of problems when they had to bring down their sails. If they didn't bring down their sails, they might break their masts. Mm-hmm. They might see a fracture of a main mast. So they had to do a dangerous job of unfurling their yards, their big sails. And they lost sailors who got thrown overboard. So what they would do is they'd tie themselves together to the mast and to each other, to various masts, to other, fixed objects on the ship's deck. And that's precisely what the big Western banks have done, lashing them together, tying themselves together using derivatives so that none of them will fail. Ooh, but if one does, they all do.
Sounds foolproof.
Pardon me?
Sounds foolproof, Jim.
Well, it makes so you don't get an isolated failure.
Right.
You get a systemic failure or no failure. If any of the bank fails, then the risk of contagion is enormous and difficult to halt. The QE has many destinations. The mortgage bonds are obviously there, but they do huge swaths of these derivatives. So QE was not only there, instituted in 2012 to cover the U.S. government debt, but it was there to redeem a lot of the toxic bonds, but also to cover like a smoke screen of this bond monetization, they can cover a lot of the derivatives. Mm-hmm. So the system cannot manage all these risks. My best sources point to the intermediary banks and mid-sized banks. And notice that we're now having a sudden rush of failed banks. In Portugal, there's one called Banco Espírito Santo. I honestly had only heard of it once or twice in 10 years, but it's in the news now. It's not a small bank. It's, I believe, their biggest bank in Portugal, and it's gone under. A very wealthy family is embarrassed that they're no longer on the list of owners. It's under receivership. They've asked for protection. They're setting up a trustee right now, I believe. So the lashing together of the big Western banks has an unintended consequence of forcing the Fed and the Euro Central Bank of covering the derivatives that hold it together, which adds more strain to the Treasury bonds and the Euro bonds, and as a result makes systemic failure more likely. Because we pass on time, and oh gosh, no big bank failures in 11, no big bank failures in 12, no big bank failures in 2013, no big bank failure. Oh, we just had one. Mm-hmm. And it's likely that it could bring down the whole system because they're all lashed together. If you bring down the Portuguese banks, I'm hearing that you're going to see one or more large French bank fail. If that happens, you're going to see one or more large German bank fail. There's your contagion.
Yep. Dominoes.
Dominoes, yes. Because they're lashed together.
Mm-hmm. Well, the image of the ship in the stormy sea with multiple sails up and guys tied together is an image well painted. Let's move on to the next subject, Jim. This is a good one. Refusal to repatriate German gold. So the refusal to repatriate German gold, which was somewhat of a recent story, relatively speaking. What was the goal? What was the intended positive outcome? And then what have been the unintended consequences?
Well, the only positive that I could see is they wanted to sustain control of the dollar and its fiat paper status. The dollar's not a legitimate currency. It's just a popularly used currency. It has no basis. So they didn't want to admit that they rehypothecated, which is another nice word of saying they stole the German gold and are willing to give them paper money in return that could come straight off a printing press from an illegitimate source that indicates debauchery of that same currency. Okay, that's not what gold owners want.
Right.
So I can't really come up with much in the way of a positive motive except to sustain the system. It's really to sustain the criminal syndicate, the crime syndicate from the banks. But it put Germany on notice that their gold was stolen. And notice that there was a story shortly afterwards that London and Paris had some German gold, and it too was not returned. So it's U.S. New York Fed plus London plus Paris. Nobody returned the German gold. So is that motive for Germany to seek new alliances?
Absolutely.
When they're getting their own national treasures stolen by their allies? I think so. So it motivated Germany to begin working more closely with Russia and China on an alternative to the dollar. I'm on record now as saying that Germany has already made a decision to turn east and work with the BRICS nation led by Russia and China. I call it R&C. R and C, I think, are going to become the leading tag team. They're going to be a pair of strong oxes pulling a wagon train. It's to create an alternative to the dollar. And they may have delays, and that's not important. What is important is the gradual rejection on a global basis of the dollar. Mm-hmm. But we got a significant set of indictments that the Germans have, and this refusal to repatriate is one of them. They got some news that was out 2 weeks ago that the BaFin, which is kind of like the German FBI combined with the Securities Exchange Commission. Uh-huh. So their FBI SEC is now going out on a mission across the German financial landscape and doing an audit of the ownership of gold. Wow. And I think it's an audit in order to declare financial losses to their nation from the corrupted gold price. I believe that's one of 4 charges that the Germans are listing now. If you look closely, you'll see a lot of objections to the Draghi Euro Central Bank and their bond monetization. They don't want bond monetization. They don't want an undermine to the euro currency. Notice that the euro is doing rather well relative to the crappy US dollars. The other charge, the third one, I call it a list of indictments. Germany is angry that the U.S. wants them to do a sanction against Russia when it's their primary gas and oil supply. Mm-hmm. And they've got all this trade, thousands of companies doing trade with Russia. They don't want that. So if if the U.S. pushes war with Russia, that will harm the German economy. They don't want harm to the German economy. They want trade and prosperity. And the last one, the last indictment charge for Germany against, I believe, the U.S. and London pair, is all the NSA espionage. And you can hear it called eavesdropping. Well, eavesdropping makes it sound like, oh, they're trying to find out where Angela Merkel's going to have lunch. No, it's a lot more than that. It's not even to find out parliamentary members' favorite prostitute or mistress. It's combined, I think, with two things. They're trying to find out what exactly Germany is doing with Russia and China developing a dollar alternative. And secondly, what are German corporations doing as, you know, development of technology and trade secrets or whatever that the U.S. could steal? So we're involved in espionage politically and corporate. And Germany, I think, will leave the euro. I'm told by German sources, they've already decided they're going to leave the euro, leave the European Union, and soon leave NATO. And my interpretation is they're going to let their NATO alliance just wither away from neglect. They're going to say, no, we won't join you in that war. No, we won't join you in this provision of weapons. No, we won't buy some weapons from you. No, we won't do this. No, we won't do that. Before you know it, people are going to conclude, well, NATO is really dead. And that's the way they want. They want it to die a death of neglect. Critics overlook Germany on its having two camps. I'm getting some criticism. Joel Skuzen just came out with an essay recently and said that I'm living up to my name of jackass with poor analysis. Well, I would like to point out to Mr. Skuzen that he seems to believe that since Germany, like with its Deutsche Bank tool for the Western bank cabal, since Germany is guilty of lots of different financial market rigging, that therefore Germany is not going to turn east. Has he paid any attention to their commercial factors? Has he paid any attention to the fact that their banks and political leaders are in opposition with their commercial corporate CEOs? And has he paid any attention to the recent signal, loud, screaming signal, Mr. Skuzen, that Merkel is going to have a premature resignation, which I previewed to my Hat Trick Letter subscribers 2 months ago. I said, you'll see Merkel resign, even though she was just elected a few months ago. She was reelected. Why does any reelected leader resign prematurely? Because she does not have the support of her corporate sector. Mr. Skuzen, you're dead wrong. I expect you to do a retraction in several months. I don't need an apology. I just want to see you maybe embarrassed for your bad analysis. Okay, here's a footnote. The U.S. government motive for war is linked to the Kremlin interfering with certain nefarious U.S. military and security business lines coming out of Afghanistan. I don't want to get into a lot of detail, but you know, on the streets, you know, kids down and out turn to syringes and shoving stuff up their nose, and the U.S. has got a monopoly on that. 80% of all the heroin in the world comes from Afghanistan, and since the U.S. took over their production is up 13-fold. Also, people need to understand that the U.S. has gotten very complex now as we're entering the breakdown, the open breakdown stage. We have two militaries. We mentioned Ukraine before, but I did not mean to give any impression, I don't want to give any impression that the U.S. regular military is involved in Ukraine. We do have some Navy ships floating in the Black Sea. We don't have any military regulars, I call them Pentagon regulars, on Ukraine soil. This is a Langley mercenary war. This is also joined by the Soros European mercenaries. We now have a situation where the Pentagon regulars are in opposition to the Langley mercenaries. The Pentagon gets its funding from the U.S. government budget. The Langley mercenaries get their funding from narcotics.
Wow. That's that is the first time that I have thought about such a division among branches amongst our U.S. military, but based on some of the things that I have seen and studied, it makes a lot of sense. The Pentagon regulars and the Langley mercenaries.
Well, it goes further, Will. Take a look at ISIS,
Yep.
which is the Sunni Islamic zealots and their guerrillas. I don't even know what to call them.
Yeah.
Militias. They're very organized, and they're working now in Syria and Iraq.
Mm-hmm.
Obama has pledged Pentagon regulars to protect oil installations in Iraq that have U.S. workers. And what I'm hearing is that the Pentagon regulars might finally get into a shooting hot war with the Langley mercenaries. And a close look at ISIS reveals that they don't look entirely Arab.
Right.
And I'd like to leave it at that because I don't know exactly what they are, and I don't think that they're, Anglo-American and British and European. I don't know what they are.
They've got some fantastic resources, I'll tell you that much.
Well, they're robbing banks, and they robbed a Mosul, Iraq bank, and they got themselves, I think it was $420 million in cash.
Yeah, that'll do it.
Okay, so here's what I'm hearing. If the Pentagon regulars come up and start having fighting war with the Langley mercenaries, the Pentagon is going to push buttons and start working with the U.S. Senate for impeachment proceedings. Mm-hmm. Because we can't have two militaries in opposition.
Right.
And notice in Ukraine, we don't have Pentagon regulars. We're now having a debate whether the Pentagon should send in military advisors to Kiev. This is the beginning of what could turn out to be the Pentagon versus Langley. And I'm hearing that Pentagon really doesn't want a war with Russia and is backing down on all kinds of decisions. And I'm actually hearing that the Pentagon is disobeying direct orders regarding war prosecution. By that I mean decisions to take on more battles. Mm-hmm. Not prosecution in a court legal sense.
Right, right.
So we're having a breakdown here. We're having a breakdown. I mean, already we got, 12% approval rating of Congress? We got pathetic. I mean, I never thought we could get lower than Bush 2 on approval ratings, but this clown, I don't want to get into details of personality, but he's not what we think he is.
Right. And
he's not about, promoting prosperity in the United States. He's about promoting divisions and apparently about opening the floodgates for lots and lots of children in the Southwest.
Oh.
I'm not sure that they have a whole lot of health standards there, but maybe that's the purpose. I don't know. This is a president who's fostering chaos and Obamacare, which is yet another tax on small business, resulting in more unemployment. This has just gone out of control. But to refuse repatriation of German gold has resulted, I believe, in Germany making firm steps and building the case to abandon the euro, turn its back on the dollar, and work more closely with the BRICS nation. I've heard, actually, that this really took me off guard. I made a complaint to one of my sources and said, Russia can hope to become a main player, but they've got to improve their legal system. They've got to improve their contract law. Mm-hmm. And I was told Germany was hired to do that over a year ago. They're trying to reform the Russian legal and court system and contract system by bringing it up to snuff, up to European standards,
right,
so that they can maintain the Russian trade with Germany.
Yeah, contract law is very, very important as these bilateral agreements are taking place.
Well, you can't get continued investment. You can't get new investment unless you guarantee the ownership of the investment.
The safety of it, right? Yeah.
I mean, you've got some old stories about Pan Am Silver, which I believe is a Canadian registered company. They just lost their whole property in Russia. Mm-hmm. on the flip of a switch. You can't have that.
Right.
You can't do that.
Right.
Not anymore.
So,
and I think that the Russians are making firm steps, and I was shocked
yeah.
to learn that they hired the Germans to bring up to speed, up to standards, their contract law. But it's going to be tougher. What are you going to do? Bring in Germans to sit on the bench as judges? No, you've got to have Russian judges follow this, and I think Putin is going to make a real big effort in the next year or two to bring about improvements. You watch.
Yeah.
I mean, I'm not a big fan of Putin and Russia and China. What I'm a big opposition for is criminal dollar management.
Right, and there we share that same disgust with Putin. Let's move on to the next one, Jim, because we're expanding on time, and a few others I want to hit here. You just brought up the border crisis. That's not even on our list, and I just have to say, what the hell could be the possible positive motive there? But I won't go there. Let's go right into our next question on our next topic, our next action that has resulted in unintended consequences: NSA espionage.
Well, we covered that a little bit. I don't know that there's much of any positive except maintaining the system again, which is pretty hard to call a positive when it's so ridden with corruption and fraud. But it has sparked tremendous distrust for the U.S. government and the nation. I mean, I heard back 4 years ago from The Voice. He said, Jim, I can tell you with full confidence, I've talked with dozens and dozens of corporate heads across Europe. They don't even return U.S. phone calls anymore.
Wow.
So this is the next stage where the U.S. government is distrusted. They don't want to have a summit talk with some head of the United States knowing that it's bugged. They don't want to have their own back room. Okay, suppose you have two ministers of finance and economic development, and they're meeting the U.S. counterpart. Well, they have a formal meeting, and everybody can listen to that. But what the U.S. has done is they're bugging the back rooms where these guys are talking among themselves.
Right.
The U.S. NSA also assisted Australia. They work closely. Australia was engaged, I think it was a couple of years ago, maybe 3 or 4 years ago, with some trade talks with Japan. And the U.S. and Australians bugged the Japanese closed quarters, not the full public room. And the Japanese are furious about this. So you think the Japanese are going to work closely with the U.S. and Australia? No. The U.S. is using their allies as targets. I have a way of summarizing this. The U.S. is overrun by fascists now in the government. The fascists tend to attack their enemies, defraud their allies, gut their banks, exploit their subjects, namely their citizens, and eventually kill their entire economic system. That's what we're seeing now. So the espionage is not surveillance, it's espionage. It's not to find out lunch dates or sex toys or mistress names. It's to find out trade secrets and plans with the Kremlin on dollar alternatives and all kinds of things. It motivates. This espionage is motivating an acceleration of the movement away from the dollar for trade and banking. I don't care which comes first, trade or banking. The other will follow.
Seems to be a reoccurring unintended consequence of a lot of these subjects that we're hitting on. Let's move right on to the next one, banker murders at the middle level.
All right. If you get one suspicious death, a weird-looking death, and it might have been suicide, I don't know. Okay, you don't really worry about it. When it's a typewritten suicide note, you do worry about it. There was a CFO of Freddie Mac in Virginia. This happened back in, I think it was 2007. He committed suicide with a computer typewritten suicide note. His wife was not in the house at the time. Okay, I think he had some help. When you've got a number of strange suicide stories, you start to arouse suspicion. I mean, we've had a number of strange deaths. I'd like to point out that this is one of my funniest forecasts. I mean, not funny in terms of people dying, but funny in terms of style and method that I came up with it. In the middle of 2011, I was told that the hope of actual prosecution against corrupt bankers in the West was just not going to happen. that they're too integrated. They're cutting deals. They're threatening with viruses and nukes. They're doing all kinds of things to buy time and save their necks. So I concluded, okay, what we're going to get is we're going to get banker murders. You're going to have some consequence. It won't be jail time. It won't be prosecution. They'll be put out of business and they'll be killed. I'm learning that being put out of business is actually one of the objectives now of the higher powers. I call it the new sheriff in town. It's very unclear who it is. I don't want to get into it, but I believe it's from the East. They're big owners of gold. But if you start having lots and lots of suspicious deaths, you start beginning to think, oh, this doesn't look like it's suicide. Finally, in Belgium, there was a drive-by shooting of a banker. Mm-hmm. It was from the street. I don't think it was a motorcycle, but it was a drive-by shooting with automatic weapons. It killed the guy's wife and killed the banker. All right, well, there was another one where some London guy was killed with a nail gun.
Yeah.
What was that, at 5 meters? Mm-hmm. At 3 meters? I mean, how do you do that if it's suicide? They didn't leave a handwritten or a typewritten suicide note. That looked like a murder crime scene. And what I've come to learn is that when the murders are sloppy, they might be done by the Russian mafia. When the murders are clean, they tend to be done by the mafia hired by the Vatican and the U.S. government mafia, namely CIA hitmen or their ally hitmen, by, say, J.P. Morgan. Mm-hmm. There's a common theme among the banker murders, and it's J.P. Morgan. My strange forecast, I got diverted from my own little sidetrack. I made a forecast in 2011 that the mid-level bankers would be murdered because they're not high enough to be protected, like executives and directors and board members. You don't kill them. You protect them at all costs. And they're not low-level because they don't know anything. They didn't do anything. They weren't in charge of any project. So you kill the mid-level bankers who went and met the dirty people, who went and set up the shell corporations, who went and did mule runs with millions of dollars in bearer bonds. So there's a whole class of mid-level bankers who are at risk of being murdered, and I hear that there are about 450 of them.
Wow.
They're at risk of being murdered, and it gets a lot weirder, Will, because the derivatives have no end in their creativity. The bankers have set up life insurance policies for the mid-level bankers.
Right.
And they have a value on them.
Unbelievable.
They're a traded derivative life insurance policy, and they justify it by saying, well, if Mr. Smith here at the London office of J.P. Morgan, if he goes, we're going to lose his relationships and his ability. So it's a loss to the company. So they insure him. Well, if that's the case, why do they still insure people who no longer work for them? Mm-hmm. So that's kind of your smoking gun that it's murder for hire. And the weird element of this, Will, is that these things, these contracts, these derivatives, have risen in value after the recent murders.
I'm sure they have.
So they're showing up as an asset increase and a quarterly profit.
Jeez.
On the balance sheets.
So they created a derivative market around simple life insurance policies, which are designed to not be traded, to not actually have a value for that very reason, because you would turn into a complete murder for profit industry. But thanks to good old creative financial instruments and derivatives, it now exists.
It now exists under the bankers, which is just another business line for a crime syndicate. Mm-hmm. And I'm sure Al Capone had the same thing. There's a price on your head.
Yeah.
Well, I own the contract on Bugs Moran.
It just wasn't traded on a public exchange.
Right. Well, if you own the contract on Bugs Moran and someone else wants to buy it and pay more for it, well, then you logged a profit.
Yep.
They're doing the same thing right now, and the smoking gun is that the families are not beneficiaries, and they're still doing the contracts after the person has left for a while.
Right.
It's because he knows too much. It's not that he's a law. They've already realized the loss of the corporation from the guy's relationships and his skill. Well, 3 years have passed, and why would they consider that to be of value to the syndicate because he knows too much about shell corporations, like, for instance, the London Whale. Mm-hmm. The biggest common denominator story of the killed London bankers that I've come to discover is that they're hiding the fact that it was well over $100 billion for derivative losses by the London Whale. It was first described as something like, I think, $300 million, then $800 million, and then it was $1.9 billion. If you look at the data now, I think you'll see $8.9 billion loss for the London Whale. I was told right away, no, it's more like about $10 billion, not one. And then later, no, it's more like well over $100 billion because this is much bigger than we thought. So they're trying to protect the image of the Treasury bond by killing mid-level J.P. Morgan bankers, because if they came forward to tell what they know, we would lose faith in the U.S. Treasury bond because it's being supported by coercion, legal prosecution, and the interest rate derivative to create phony demand. This is nasty stuff.
Yes, it is. Yes, it is. That's God, thanks for that, Jim. That's good. It's nasty, but I tell you, I'm really glad to be able to share this information. I'm glad you're able to as well. Let's get to our last point here. Again, what are the unintended consequences that have arisen from this action? Punitive, motivated prosecution of PNB Paribas and Credit Suisse and Deutsche Bank.
Okay, first came Credit Suisse, and remember 2 or 3 years ago there was a case against UBS, Union Bank of Switzerland. The two Swiss banks were being nailed for having secret accounts, slush fund accounts that have resulted in tax evasion, hiding dirty money. We're well past hiding Colombian drug money. This is ordinary Americans setting up slush funds, avoiding taxes, and I don't know what else, but just a lot of stuff like that. They already took control of UBS. And what I'm told is that UBS was the home of a lot of Arab gold. So they went after Credit Suisse because they weren't cooperating on stealing the Arab gold. So they nailed Credit Suisse with, again, tax evasion and all kinds of other violations. But the key part to it is they forced Credit Suisse into admitting guilt, admission of guilt, a formal document admission of guilt, which means they lose control of their bank. And they can be perhaps folded under UBS, where the channels are already there for stealing the Arab gold. So the Credit Suisse case might not be about tax evasion and might be about, instead, stealing Arab gold. Now, PNB Paribas, it stands for National Bank of Paris in the French language, merged with Paribas a while back. All right, what you're told is that they had violations of government sanctions against Cuba, Iran, and Sudan. Okay, well that sounds okay until you take a closer look and you see that they possibly were conducting a lot of treasury bond dumping for client states like, say, India, China, other nations. I don't know. But apparently they had quite a bulge. And maybe they were putting it in the Belgian clearinghouse, showing up on the tick reports as Belgian Central Bank gold. I'm sorry, treasury bond. Belgian Central Bank treasury bonds. Okay, so what I'm hearing is that PNB Paribas was acting as intermediary, setting up a giant amount of treasury bond short contracts, futures contracts. And rather than like a gold contract that you sell, you deliver the gold, well, these treasury bonds that you sell, you deliver the bonds. To interrupt PNB from delivering the bonds for dumping treasuries, they went after and did a prosecution for sanctions violations. And when I was hearing the story develop, I remember saying to some colleagues, well, let's look for the details of this settlement and how they deal with the prosecution, how they deal with all the different fine points when all the dust is cleared and the hands are shaken and everything is signed. And there it was. PNB Paribas lost its U.S. dollar trading privileges. So I believe PNB was slammed and forced into admission of guilt, possibly to fold it under the other big French bank called Societe Generale, SocGen. SocGen is already part of the London and New York syndicate. They already have big short positions in gold. They're already playing the games with Wall Street and London. So PNB Paribas was not. They got different ownership. They're old European families. I heard that from a really good London source banker. So, you know, you've got these other consequences. When we went after the big French bank, the French central bank head, Noyer, pledged that he was going to double his efforts to find a dollar alternative. They don't need to use the dollar anymore. They're going to amplify their efforts to get away from the dollar. Now, the Swiss, I don't see any big, ugly consequences there, except you know, the Swiss are more understood as being a criminal banking nation. They're losing their global trust. You know, I try to watch what the Chinese do with the Swiss bankers. They set up an RMB swap facility, the yuan swap facility, and let's see what kind of trade comes from that. I don't think they really trust these Swiss bankers, but I don't think the Chinese have any gold there. The Chinese are receiving gold from Switzerland from their amplified 24/7 refinery action. Deutsche Bank could be the final thorn, the final lever for exposing U.S. duplicity. We're now starting to hear more stories that we might prosecute, the U.S. government might prosecute Deutsche Bank for being involved in London gold and silver price fixing, collusion of prices. Yeah, what London and New York banks do every day.
Right.
So the hypocrisy might come out, the double standard might come out. If they try to slam Deutsche Bank, I think the Germans are going to turn right around and say, we're done. We're done. We're going to go now public with our non-dollar trade settlement. We're going to go public with our open integration with the Chinese currency and the Russian currency. We're going to go open with our efforts to create a dollar alternative, a BRICS gold-backed currency. We're going to go open with not wanting to cooperate in any way, shape, or form with NATO military initiatives. So I think Deutsche Bank is a very big case coming up. Credit Suisse was the warm-up. That was more of the same. PNB Paribas, that was different. This is a French bank, a respected French bank. They got their problems. But a $9 billion fine, that whacks a good deal of their equity. That really does serious harm to their bank capital ratios. But it did bigger harm to the national sentiment. Their president, Hollande, and their central bank head, Noyer, have both come out with some very hostile statements. This is an ally. We're losing our allies because of war and central bank corruption.
And we're losing them fast.
I think it's going to just pick up speed like you cannot believe. If I could close, pardon me, if I could close, there's some very important signals that I think are happening right now. We created Ukraine as a bad war with a bad plan. I mean, we actually wanted to stop the pipeline flow of gas to Europe. But they've got a Nord Stream with a lot of LNG facilities supplying Germany and other nations in the north. And they've got a construction project that's not being interrupted called South Stream going through Bulgaria, Hungary, Austria. It's going to feed more of Europe. It's going to have its first deliveries next year. It's going to have full delivery with all the other nations in 2016. This is a bad energy Maginot line for World War II history buffs. Belgium created a wall that was something like 8 feet high in Belgium. They thought they could keep out the German army. Well, they just landed parachutes on the other side. You know, this is not well thought out. The U.S. is in an act of desperation with Ukraine. Another big signal was Jamie Dimon, the CEO of J.P. Morgan. He announced his resignation for throat cancer. Well, I have a source who's got friends who've been in J.P. Morgan for 20 years. They said he's got no throat cancer. He's fine. He wants out. And look for him to seek cancer treatment in a foreign country.
Right.
We got the J.P. Morgan headquarters, a big signal being sold to the Chinese. Mm-hmm. We got this PNB Paribas case. I think it has to do with blocking treasury bond dumping. We have the Saudis in an actual divorce with the United States. They had an Obama summit meeting with King Abdullah. I believe it was in May, and it lasted 20 minutes, and it was so disastrous that the U.S. State Department removed evidence of the meeting from its website. I mean, they tried to take back brochures. I mean, this is way out of control. Now you have the Saudis engaged in a love fest with China. Yeah. Having a big summit conference, economics and finance or whatever, every month. Mm-hmm. Furthermore, you're having all the Gulf Arab nations doing a détente, rapprochement, repair with Iran. These are all very big signals. Yeah. I'm expecting the next one is going to be Deutsche Bank and the Germans start making openly hostile statements about the dollar and continued relationships with the United States.
Great stuff, Jim. Great stuff. As always, I can't thank you enough for coming on today. I like that we tried to cover a different, a different theme, if you will, with the unintended consequences. And I think it really, the theme was a bit repetitive, right? Well, what's the positive motive behind any of these events? Well, to sustain this nasty system. And then it seems that the unintended consequences have done just the opposite, slammed down on the gas pedal of the eventual unraveling of this thing. So anyway, thank you so much, Jim. It's always a pleasure.
It's a pleasure being on. I hope people go to the Golden Jackass website, take a look at the free material, and sign up for the Hat Trick Letter.
Absolutely. Yeah, again, Jim is the editor of the Hat Trick Letter. And you guys can find that on goldenjackass.com. We'll have links and all that good stuff in the video description. But thanks again for listening, everyone. And Jim, thanks so much for your time.
My pleasure, as always.
Thanks. Take care.
Bye.